Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
The Hang Seng is still holding on to some bit of those gains, trading with gains of around 0.8%. The Taiwanese index is absolutely at the flat.
Company's top line, constant currency revenue growth has declined by 3.3% on a sequential basis.
We partnered with AbbVie for US, Canada, Europe, China, Japan, most of the developed markets.
So the support for the Nifty at 25,244, which is the 20-day moving average.
This also included a minus 2.8% of BSNL degrowth.
The Nifty is down about 1/3%. The Bank Nifty is absolutely flat. Actually, the Bank Nifty wants to come into the green.
India needs companies like this to sort of create talent pools and, more importantly, create manufacturing.
Today we are below that 25,200 mark, and in just last couple of minutes we are at the day's lows.
Now the leader is Priya Nair, who has been appointed as MD and CEO to succeed Rohit Java.
Tesla is all set to launch officially in India. This is on the 15th of July. Maker Maxity Mall in BKC in Mumbai.
Consistently been breaching those levels, first 25,500, then 25,400. Today we are below the 25,200 mark, down 200 points on the Nifty, and even the broader markets are not supporting.
Well, it's 200 points lower on the Nifty. That was the day so far in terms of what has happened, and it's been consistently down. That is, this is the last hour today, the last hour this week in terms of trading action. We're coming to you from the CNBC-TV18 Motilal Oswal studios, and with me, my colleagues Surabhi and Reema. Guys, hi, afternoon.
Hi, good afternoon, folks. It's been a tough week for the bulls. It's been a slow grind, and towards the end of the week, between Thursday and today, it's become now a bit of a cool-off. Index down more than 1% for the week. Mid-caps also. The cuts are between 1% and 2% for the week now.
I'm sorry, Nigel is also with us. I thought Nigel is taking it easy today. But Nigel is... maybe Nigel is taking it easy today.
It's a full house after a long time, guys. So congratulations to all of us for making it.
Feels like an achievement, no?
Yeah.
But
I have been here. Welcome back, guys.
That's right. I think we should welcome ourselves back. Huh?
That's true.
But it's kind of a little bit under pressure. But if you had to kind of sort of write headlines for, as they say, news headlines to describe the market this week, would you say it's a bad week? Would you say the markets are in a downward drift? Or would you say it's kind of sort of the activity just generally quietened down quite a bit? And I think it would be the latter. Started on a very quiet note. Bulk of the week has been pretty close, quiet in terms of volumes, etc. And now, once again, today, it is quieter, but on the downside. The only difference between today and, of course, the rest of the last few days has been the fact that the Nifty IT index is seeing an outsized near 2% fall. And that is, almost single-handedly contributing to bulk of the losses. It's not as if the broader market is doing all that great. Advance decline, the last I checked, is -2 declines to every one advance. But in terms of just the sheer fall that we're seeing, the 200 point, I think you can chalk it up to what's happening on the IT stocks. And Reema will have more on that. Reema?
Indeed, the Nifty IT index is down 1.8%, and even going into the numbers, it was a bit subdued this week. The IT index is down 4%. It's stocks like TCS, 3.5% at the day's low now for TCS. Wipro under pressure, 2.5% ahead of numbers next week. So next week, you have numbers from HCL Tech, Wipro, Tech Mahindra, and on Monday you also have Tata Tech. So we will know in greater detail whether this TCS number, what we've seen in TCS is a broad-based pain across the industry, or TCS particularly was hit harder than the rest.
Oh, absolutely. It's been a disappointment, no two ways about that. But let's see. Talk about what else is leading the market down, because you cannot squarely pin the blame on TCS. Other weak hands include big names like Reliance. A lot of financials actually are also weak, including the Bajaj twins, Bajaj Finserv and Bajaj Finance, both on the weaker side. There's some cool-off in Jio Finance as well. Bharti, second day running. Bharti was down about 2.5% yesterday. It's down another 2.5% this afternoon. So there's a fair bit of weakness. If anything, the banks are relatively better off because at least they're not leading the decline. They're not down the most. ICICI Bank and SBI, they're all sitting on the fence. And if they decide to make a bigger move in the next 60 minutes, it'll obviously have a bearing on the index. On the upside, it's Lever all the way. It's actually been FMCG's week. Lever is not just the best performing stock today, it's the best performing stock of the week as well, of the week and the month. Lever's put on 8% very quickly in the last 5 trading sessions. So really holding out. There's some green on Nestle as well. But yeah, I guess, the big story, Nigel, of the week has been the hope around FMCG.
Well, indeed, Surbhi. And I think by the end of today, the bulls will like to get closer to around the 20 DMA. It's around 80 points away from current levels, but I think the bulls will want to conquer that 20 DMA on a closing basis. So we'll have to see how it goes, but it'll be interesting to see who exactly puts up and fights for the bulls. For the time being, we're seeing a couple of these pharma stocks, Cipla, Sun Pharma, both of them at the high point of the day. And Tech Mahindra actually has cut its losses. So that's another interesting mover out there. Somil Mehta from Mirae Asset Sharekhan joins us on the show. Hi, Somil. Good afternoon. Good to see you in. Friday afternoon, how are you feeling about the markets? People wanted a dip. They've got a fairly okay dip, 26,000 to around 25,100. You look to enter, or do you believe the market wants to test lower levels?
Afternoon to everyone. Today is the first sign of reversals. I can see that the markets have broken the previous swing low, which was 25,330. Closing below 20 daily moving average. So this is the first sign of reversals in the short term. And I think it's best to book some profits and go short on weaker sectors like IT is already weakening. Auto sector, the large caps are looking weak. Oil and gas, GAIL, ONGC are looking weak. So large caps are looking weak there. And in fact, mid caps would be correcting very sharply if the large caps are correcting sharply. So today is the first sign of reversal. And I think the next targets would be 40 daily moving average, which is 25,000, close to 25,000, and the lower Bollinger Band of daily charts, that is 24,700. So these are the two levels I'm looking for in the very short term. And now the view becomes a little negative on the short term horizon.
Okay, Samal, hi, afternoon. Good to see you. Your stocks?
My stocks would be one of them would be from IT, Wipro, sell on every rise. Trading below 200 daily moving average, trading below 20 and 40 daily moving average. Just broken a small consolidation on the downside. Stop loss would be 265. Target would be 242. The second stock would be Crompton. Same setup. Consolidation broken on the downside below 200 daily moving average. Sell on the momentum indicators. Stop loss would be 345 and the target would be 320.
Okay, Samal, thank you very much for that. We'll come back to you for more. Lever is the big story, right? So it's made people sit up and take note. Abrupt kind of a departure of Rohit Java, and there's a new boss at the country's largest FMCG company, which of course is also a jewel in the crown for Lever globally. Mangalam is standing by to run us through the news, of course, which we've been tackling, but implications really. Mangalam, over to you.
Well, the most important story that we've seen in the consumer space this month, at least, if not this quarter, that is the management rejig at Hindustan Unilever. The big news that came in yesterday as a surprise was Rohit Java deciding to step down within 2 years of appointment, making it one of the shortest stints that we've seen as an MD CEO of Hindustan Unilever. He wishes to pursue personal goals, but more importantly, Priya Nair has been appointed as the MD and CEO with effect from August 1, 2025. The first woman leader of Hindustan Unilever, the first time, but I guess about time, largely because they've spawned a lot of women leaders who've gone ahead and led other companies, the likes of Prabha Narasimhan, who leads Colgate. You do have Geetika, who leads Nivea India, and many others. Priya Nair currently is the Executive Director, Beauty and Wellbeing at Unilever, But that's just a very recent position. Before that, she's been in Hindustan Unilever for a very long time. She joined Hindustan Unilever in 1995, known for digitization, premiumization, and purpose-led brand building, particularly in the home care space. So home care and beauty and well-being well taken care of by Priya Nair's experience. The first woman CEO of HUL. Remember, most of the consumers for HUL are women, so it's about time that the leader is a woman as well. But more importantly, a couple of things that we'll be watching out for as she takes takes the chair of the MD and CEO. The first thing, the consumer sentiment, which has been very tough for the last 2 years, that is turning around. So recovery in volume growth led by consumer sentiment is something that the street will keep an eye out on. Secondly, there has been a strong premiumization trend in beauty and personal care. And in that, Hindustan Unilever has not been at the forefront. In fact, a lot of these D2C brands have been at the forefront. So the minimalist acquisition and all these things that they're doing can, Priya Nair actually go ahead and lead growth in the premium personal care brands as well, along with her experience internationally. And finally, personally, I'll be watching out for what the company does in the foods portfolio, because ever since the Horlicks acquisition, growth in the foods portfolio has not been as analysts expected. The other parts of the portfolio have been impacted by commodity prices. And now with the ice cream business being demerged itself, what remains and how the company can innovate and grow in their foods portfolio, something that the street will be watching. Hindustan Unilever, the stock has been under pressure, in fact, underperforming for the last 5 years, absolutely flat. The previous 5 years grew about 4 times. So after this time correction, after this valuation correction, with a leadership change and consumer sentiment reviving, are pieces of the jigsaw falling in place for Hindustan Unilever to rise again.
Well, both, thank you very much for that. Let's ask this question to Siddharth Bambre from Asit C. Mehta Investment Intermediates, who's joining in. Siddharth, would you say that this could be the turning point for HUL, at least over the near to medium term?
Good morning. Good afternoon, team. Thanks for having me on your show. Mangalam pointed a lot of important points. And just to add what he mentioned, the beauty and personal care segment, which constitute around 36% of the top line for HUL. And mind you, this is the highest margin segment, around 25% for HUL. And with now a new leader who has extensive experience in the space, and probably would bring in a lot of international experience also with her now. I believe the growth rate in this segment, which is a high margin segment, was very tepid, around 1%. And if it goes to 4 to 5%, I think HUL would see significant re-rating. As Mangalam was pointing out, last 5 years stock has not done anything, thanks to earlier there was a lot of demand issues, first pertaining to rural, then urban stagnation. Now we would see that the P for HUL, which was trading at 7 to 8 years low, around 2200 levels, though there has been a sharp rise in stock price, but we still feel that if the demand revives, combination of premium products coming up, margins expanding, so I believe this would lead to re-rating of HUL, and combined with overall market where in large caps or even in mid caps where valuations is difficult to it's very difficult to justify buying a stock based on valuation. I think HUL would be a compelling story going ahead.
Okay, so positive view on HUL. Got that. Siddharth, good to have you on the show, connecting after a bit of a gap. So good to see you in. Overall, let's talk about earnings and what your estimates are for Q1. I mean, broadly, the expectation is that earnings will be much better this year compared to last year. Which would be the specific smaller segments or sectors where you would expect a meaningful growth pickup?
So, Subi, thank you once again. And great to connect back with CNBC-TV18. We are expecting H1 of FY26 to be a bit muted. And I think we are not different industries also expecting the same. The growth would probably emerge in H2. And FMCG is one of the space where we would see growth would come back. We have some names like Godrej Consumers, then probably Bikaji over there. Then we would probably also see highly competitive space of late. Varun Beverage, which is also a part of our coverage. There we would see that earnings would revive. Stocks has been under pressure. Even if you look at some of the beaten down names, and I might be in minority over here when I state that we are expecting paint companies to see a higher growth rate. But again, I'm saying that it would be more of H2 rather than H1 over here. We are liking their Berger Paints, which is not the leader in space, but we are seeing, in fact, a few weeks back, management was there on your channel and they had a very positive commentary pertaining to the demand scenario. We also like Kansai Nerolac in that space, which is combination of industrial and decorative space. So these are a few names from consumer perspective. From BFSI, I think one should keep eye on what's happening in smaller banks. Some of these smaller banks who had exposure in MFI space have done a lot of rejig in their product mix. Also, there are some of the names down south where we are seeing the credit offtake in these banks are substantial. ROEs are improving. NPAs have been taken care of. And as everyone says that, corporate balance sheets have been quite deleveraged. So even some of the PSU names would probably do well. So there are a lot of pockets where probably you would see earnings reviving. But can you say that valuations are cheap? I think it's very difficult to say that. So lot of tactical positioning one has to do in this kind of market. It won't be easy, just to buy and then forget it for 1-2 years. I think there will be a lot of tactical shifting one would have to do if you are not a very long-term player in this market.
Got that. Let's quickly just address TCS because that's the big drag today. Stock is still down about 3.5%. And now the year-to-date correction stands at nearly 20%. Big miss on the company's top line, 3.3% lower. A majority of the reason is because of the BSNL ramp down. But even otherwise, ex of BSNL, the company degrew by nearly 0.5%. And the thing is that, when we asked the company, the management, about whether some of the projects which are paused right now, are there any signs of them restarting? He said not immediately. When also asked, then is Q2 going to be a washout? He said it's too early to say if it's going to be impacted, but he isn't seeing a big bounce back, at least coming through in Q2. Second half, we'll have to see how that plays out. So what should be the appropriate valuation multiple you should ascribe? Because, it's unlikely, given the state of affairs right now in the start to the year, that FY26 growth for TCS is going to be better than FY25 on the whole. For the ex of BSNL business, it may be. The management believes it can be. They're confident about it. But on the whole, they're saying it's going to be tough for the company's FY26 growth number to be better than FY25. So, Siddharth, with this kind of a growth, we're talking about 1-2% kind of a revenue growth for India's largest IT company. What does this tell you about the sector per se and what it's likely to do in the next 1 to 2 years? And if someone is an investor, should they sell out now and perhaps look for other companies where there could be better growth? Or this is not the right time to sell a marquee company like TCS?
We are negative on IT, and I'll tell you why. We are interacting with a lot of money managers, and beginning of this financial year, we took a call that if you want to beat, especially in a large cap fund, if you want to beat index, the strategy is simple that you have to be overweight bank and you have to be underweight IT. These are the two heavyweights. Why underweight IT? Because now what TCS management said yesterday and today to all of you, that was clearly writing in the wall that because of geopolitical issues, because of trade conflicts, the most impacted sector for India would be IT, probably followed by pharma, because these are the two spaces where the exposure to US is pretty high. And not that this 1%, 2% or 0% growth. This is not first time IT space is experiencing that. We have seen this happening before, but what is different this time is valuation. Earlier, when we saw the IT space not growing or slightly degrowing, you would probably see TCS available at 20-21 times P. You would probably see Infosys available at 17-18 and HCL Tech Wipro probably less than 15 times. But right now, we are seeing most of these names are available at 25 times P. So I am not very comfortable, buying these names now. And if there is no growth rate, the only way they will become attractive in valuation by price correction. So even if you're an absolute investor, I think this is not time. This is not right time to take exposure in IT. And even in mid-cap space, where people would say the growth is coming in mid-cap space, and now valuations are happening in price to earnings, and people are adding PEG ratio in that. But the sensitivity to growth increases when you see PEG. So even if there is a slight fluctuation on growth on the lower side, you would see a significant derating in even mid-cap stocks. So I think for next 1 to 2 quarters, it won't be a wise thing to add too much of weightage in IT portfolio.
All right. Hi, Sid. Good afternoon. Good to see you in. Sid, give us one stock, though. You know, IT, mid-cap IT could be a little expensive, but from the the mid-cap space itself, there'll be a couple of stocks that you like, right? Name one for us. Friday afternoon, our viewers would like to know one stock.
So IT definitely not, Nigel, but then if you insist on other mid-cap space, yes, we are covering a lot of mid-cap names.
Give us one.
I mentioned one of these stocks. It's a Bikaji is something which we are liking in FMCG space. You can also look for Karur Vysya Bank from a mid-cap space.
Karur Vysya, got it.
Okay, so Siddharth, let's talk about some ideas. And as we go through some of these earnings, you've given us some names, BFSI, what you're watching out for, some of the paint companies. But if I were to ask you about 3 or 4 high conviction names from your list, your universe, and these are not short-term trades that we're talking about, but investment ideas, what's top of mind for you?
So the ideas which I gave, that is Bikaji and Karur Vysya, these are purely based on fundamentals and the kind of valuations which you are seeing. So Federal Bank, if I have to elaborate on that, so this bank is showing decent credit offtake around 15% or so. We are also seeing that the exposure to MFI is negligible, and we are seeing improving ROAs. Also, we have seen that, from valuation perspective, it is right now available around 1.3, 1.4 price to adjusted book value. And looking at how, financials are doing, easily this stock can move towards, the valuation can move towards 1.6 to 1.7. So we have a decent price target of around, which is giving a decent upside of around 15 to 18% from 1 year perspective. Obviously, if markets are volatile, stocks can come down and you can buy that. Now, if I look at other spaces which we are liking, look at some of the names in cement space. Now, cement story is purely based on how much one is adding capacity. So some of the names which we recently added to our coverage, like Dalmia Bharat and JK Lakshmi Cement. Now, these stocks, of course, they have run up recently, and we did had coverage 1 month back. So these are also 2 names where we are seeing that. The input cost pressure, be it the limestone, be it transportation cost, be it adding green energy to its consumption, we are seeing that from realization perspective, from pricing perspective, the environment is quite favorable for these names, and especially those companies which are trying to cater towards the eastern market. Where demand scenario is pretty high. So even Dalmia Bharat and JK Lakshmi Cement are some of the names which we are liking from fundamental perspective, from long-term perspective.
Okay, all right. Thank you very much. I appreciate you joining us. With a couple more questions, but out of time next time. Look forward. Thank you indeed. We'll take a quick commercial break here. We're going to come back with Rahul Veera of Nippon India AIF on the other side. We'll talk some sectors and Rahul's broader market thoughts. Okay, welcome back. Now, about 35 minutes to go as far as market closing is concerned. I just want to quickly make a mention of what's happening in Religare. Religare has moved up sharply. Just look at that, 9% higher on Religare, 273 odd rupees or so at this point in time. Now, there is a board meeting today in which, most likely the Burman family, which already owns a little over 25% in Religare, is going to put in more money. Now, the widespread expectation is that they are essentially going to buy more than 5%. Remember, if they buy more than 5%, that sort of triggers an open offer. The offer will have to be, remember, there was an offer earlier. The earlier offers was at about 235 rupees, but that kind of failed because the price moved up and nobody really tendered their shares in. This time, of course, the expectation is that, they will buy over 5, trigger the open offer and kind of sort of acquire a substantial portion of the company. We'll see. We'll wait and watch what happens. The other sort of line of thinking here is that maybe the Burmans stay under 5%, not trigger the open offer, and trigger a pref issue. I mean, essentially the company does a pref issue, brings in some outside investors, etc. as well. So, as I said, the board meet is today. These are the two, in a way, sort of lines of thinking as far as Religare is concerned. We'll have to wait and watch to figure out what essentially exactly does take place with this one. But, the story has been very clear, compelling in terms of Religare, the Burman family, some of that Dabur P multiple magic rubs off on Religare, although in terms of the business value at Religare, it largely is the insurance subsidiary, which is Care Insurance. And of course, there was that protracted battle going on with the CMD, Ms. Saluja. So I think all of that, of course, also now fading into the background. The hope is that there will be the Burmans who will take charge and sort of build out the other businesses, broking, NBFCs, and whatnot. So we'll see how this one goes. But today is an important day in that sense, and a sharp up move coming through. Rahul Veera from Nippon India AIF is with us now to take us through what he's making of things. Rahul, good to have you with us here. Thanks very much. What are you eyeing, Rahul, at the AIF, at the fund? I mean, where are the opportunities?
We believe that overall, at this point of time, between the large caps versus mid caps, there is some valuation gap between the large cap and mid cap. But given the 1 year or 2 year, mid caps will relatively be better in terms of the absolute alpha or the outperformance versus the large caps. So across, whether it's banking sector or the IT sector, we've seen that the large caps, in terms of their outcomes versus the expectations, is relatively weaker. Whether it's bank or IT, you will see slightly better returns in the mid caps across banking or IT names.
So you want to just quickly, Rahul, tell us any big changes that you've made to your portfolio in the last 1 month? Any thoughts on IT and the way we've kickstarted the earnings season?
So in IT, we continue to remain a little bit on the mid-capish side. And we might take some contra calls on the ENRD space overall, which have not performed well. But we are seeing some slightly green shoots in that space. Probably some of the names that we have historically been ignored in the last 1.5 years could give some decent alpha over 1 to 3 years now.
So ER&D space, particularly auto, or it would be across, tell us a little bit more about the thinking and what are the green shoots that you're seeing?
We are seeing some positive commentary coming out on the lower base side. So some of these companies that have global companies, right, which have commented slight positive on the ER&D expenditure. So probably this will be the green shoot that we are looking at this point of time. The company's numbers that will be reporting on the domestic side will take some time to show that. But in terms of valuations, they are closer to the bottom now.
Okay, so that's a take on IT companies. Rahul, hi, good to have you on this afternoon. What's your stance on FMCG? Because the market is now building on this hope that maybe we're past the worst. And even if volumes pick up a little bit from here, maybe that could result in stock price appreciation. Your thoughts?
Again, we are playing a similar thesis in terms of between the large caps and the mid cap. On the consumer discretionary spend, we are focusing on more of niche consumer discretionary names there. Large staples will see some revival. Volume growth is going to come back across a few names, given the low base last year. Plus all the macro indicators, right? Whether it was your salary transfer, taxation, all the other data points that we are aware, good rural monsoon. So some kind of indicators are there, but on a low base, they'll do better. But in terms of pure alpha generation, we prefer to be on the mid-cap names.
Yeah, got that. You know, I just want to take a quick look at some of the other movers, right, which are coming through. BSC is down another 3.6, 3.5%, right? So actually, just look at this week. This week it's down 10%. That is Bombay Stock Exchange. And from the highs, it is the high was made. It was, I think, on Monday morning, right? The news came that SEBI order came. That was last Friday, Friday morning. The high is about 3,030, and the stock is about not 1,000 rupees, but less than 1,000 rupees, 2380 or so on BSE at this point in time. IREDA is another one. We spoke with the management earlier. IREDA, by the way, is down 5.5, and it's the third largest volume-led loser right now on the NSE. There is MCX, which is another one, which is down about 3.5%. I think for the week it's down again 10%. So it's not a great week for exchanges. And MCX, by the way, is of course the monopoly business as far as commodities is concerned. CDSL, Amber, Elecon, Hitachi India, BEML. Actually, there is, I mean, I can spot at least 12, 13 very large volume-led losers coming through today. Unlike what we've seen over the last couple of days or so, there is more. There's more HUL information flashing at the bottom of the screen. On the screen, this is a CNBC-TV18 exclusive. The current CFO of HUL, as our colleague Shilpa will tell us, and she'll join us in just a bit, is also likely to step down and is likely to be moved to a global role. This is what we're picking up. We will put out the HUL statement as well. We wrote to them, and I think we've got a response which will be put out as part of the graphics in a bit. So Ritesh Tiwari likely to step down as HUL CFO to be moved to a global role. This, of course, comes after Mr. Rohit Jawar, the CEO and MD, stepped away from that position as well. So looks like at the top level, I mean, there are changes and maybe a new team which is being brought in with a new sort of boss right at the top coming through as well. I don't know, Rahul, if you have any thoughts, and as I said, Shilpa will join us with the story in a bit, but in the meanwhile, any specific thoughts on this development? If you don't want to talk about Lever per se and what this means for Lever, it's a giant, tough environment, in that sense, a new boss. How do you view that as an investor?
So management change, and that too when you see the background of the new MD, right, in terms of the kind of achievements that they've been able to get, the kind of aggression that they've been able to get, there is some kind of a hope that gets built in. So that is what we are seeing, the reflection in terms of the built-in expectations from the investor community at this point of time. But again, as I said, in terms of what we are paying for the same staple companies at 45, 55p, it's a little bit challenging for us to take calls on these at this point of time.
Hi, Rahul. Good afternoon. Good to see you. And how are you all placed on pharma? Glenmark Pharma, out of nowhere, there's this big news that's come in there. The stock already rallied 20% in 1 month. It's put on another 15%. The street is optimistic. One would wonder whether or not it's making a near-term peak. But what's your view on the pharma space? What are the opportunities you all have identified?
See, between the pharma space, we are avoiding the larger generic names. CDMOs or domestic pharma names are the relative better ones at this point of time. Again, pharma as a space continuously remains a pure bottom-up stock picking game. Now, the event that we saw today for one of the names that we just discussed, such kind of events will always create a new trajectory for the company and help in the medium term. But on the generic versus CDMO versus the domestic, we are preferring the CDMO and the generic space.
Rahul, so ER&D could be a potential contra call. Anything else where valuations are looking attractive and growth will soon follow?
Right. So at this point of time, whether it's cement, chemicals, and a little bit of discretionary consumption, this is what we are looking at this point of time. We believe there will be a reversal in terms of volumes, pricing across both cement and chemical as well. So there is a kind of an expectation that is not yet built in. So we see some kind of upgrades that will come through in the cement as well as the chemical names.
Okay. All right. We will wind it up on that note. Thank you very much for being with us, Rahul. Wish you a good weekend, and we look forward to more conversations. The Unilever news continues to be digested by the market. The stock is absolutely fine. I mean, though, yes, it is two top-level, potentially two top-level departures. One is official. The other is, it seems to be in the works. The stock is okay because the new lady coming in is not so new after all. She's an old hand. And perhaps the market's betting on her leadership now, 100 rupees higher on Hindustan Unilever today. Let's move on to the other big story that's been playing out over the last 24 hours, and that's Glenmark Pharma. The company has signed what is a landmark out-licensing deal with the US pharma company AbbVie to develop and sell a drug to treat multiple myeloma. Now, this is very big for Glenmark because the company stands to gain as much as $700 million right up front in upfront payments and maybe over $1 billion over the course of the life of this drug if it proves to be successful. We caught up with Mr. Glenn Sanlana on the deal and what it means for Glenmark.
Clearly, this is a huge moment for us, right? I mean, we've been working on this for 25 years in the innovation space, and I think 2001 really is a world-class asset, right, which can be transformational for patients. From a partnering perspective, the way we've structured it is we've partnered with AbbVie for US, Canada, Europe, China, Japan, most of the developed markets, and Glenmark will commercialize this product eventually, right, in India and all emerging markets. So the two of us will make sure this asset is successful going forward.
So explain the financials to us. $700 million is what you would get upfront, $1.2 billion in terms of milestones, and the remaining would be royalties.
That's correct. So we get a $700 million payment upfront, and as soon as we get regulatory approvals, that money will be received by us. The milestones, the $1.2+ billion of milestones are spread into clinical development milestones. So as the molecule progresses to clinics, we keep getting milestones. Regulatory milestones, so as the molecule gets filed in various markets, we get and approved, we get milestones. And then we get sales-linked milestones. So cumulatively, that number comes to $1.25 billion, for the asset. And then once it's commercial, we get royalties on sales, which, as you know, some of these innovative products, the life of the royalties is pretty long. So this could pretty much be an annuity if the molecule makes.
When do you think that it will probably hit the market or show any kind of results?
So AbbVie takes over all clinical development from here on. In terms of time frame, I mean, I can't give you a specific time frame, but typically molecules, if you look at other assets, right, in the space, they typically take about 4 or 5 years at least to get to commercialization.
Okay, that HUL exclusive that we put out with which our colleague Shilpa is getting to us. Shilpa, good break. And what are you picking up? Is this imminent? And tell us about this.
Yes, well, what I'm picking up is that as part of the management rejig that's happening at HUL here, now the CFO also, Ritesh Tiwari, is likely to be stepping down from his role as CFO. But unlike Rohit Chava, who's leaving the organization, Ritesh Tiwari is most likely to be moved to a global role. And what exactly that is we are yet to get some clarity on. Now, remember, he's been the CFO of the company from 2021. And this move comes at a time where the FMCG industry and the company has been grappling with low volumes. There's been subdued consumer demand. There's been rising competition and rising inflation as well. And at such a time, there is a rejig. And this is not just independently happening only in HUL, right? Even at Unilever, we've seen a rejig that happened in February also. And these are a series of steps that have been, set in motion as a larger turnaround plan for the company at a global level. So what we've been given to understand is that Ritesh Tiwari is likely going to be moving on from HUL, and he will be given a global role. Now, to understand a little bit about him, he's been with HUL since about 1999. He's held a whole host of roles, and he has been the CFO from the 1st of May. Now 1st of May 2021. Now we reached out to HUL, and what they've told us, and I'll read that out to you, is that at Unilever we consistently nurture talent and groom leaders. Our career planning includes equipping our people with wider skills and experiences to pursue diverse career paths, and this is part of our ongoing talent development process. So HUL has not denied the development yet, but they haven't even categorically, sort of confirmed it yet. But this is what HUL is telling us, and that's what we are picking up from our sources as well. Back to you.
All right. Thank you very much for that, Shilpa. Appreciate it. Well, that's the lever sort of break. Stock, of course, has been firm and hopeful from the word go, and kind of hanging on with those gains even right now. So if you want to come in?
Yeah, no, I was just saying that, that's lever, and lever really has been the stock of the day and the stock of the week as well. We'll take a break on that note, come back on the other side, and we'll get you all the buzz and chatter from dealing rooms, and then some final trading calls for today and for this week.
Welcome back. Well, the markets are still down close to 200 points, really lacking direction. It's a listless session yet again, but now we're moving gradually to the lower end of the range. That said, it's time for our special segment, D-Street Chatter. Nimesh joins us to tell us how is he reading the trading action. Well, Nimesh, another day we're down 200 points, but there's still not a big reason to be concerned, I think so.
Absolutely. If you look at this week, the Nifty is down 1%. We've lost a bit of momentum. There is lack of participation, lack of triggers as well. But having said that, it may not show up on the indices or in the Nifty or the mid-caps index, but a lot of individual stocks have yet done very well, especially the broader market names. I was surprised to see a lot of SME stocks doing very well in this kind of a market where it's lost momentum and a bit of buying interest as well from large institutions. So from that perspective, it's been quite range-bound and lackluster, so to speak. Today it's dragged by IT because that's been a big weight, and because of TCS numbers, we saw a bit of reaction on all IT names. But again, from a flow perspective, it's been pretty mixed. I understand there's going to be a small MOC basket selling, so some individual names may get impacted in the last 30 minutes of trade today. As I said, the broader markets are relatively outperforming. So while we've lost some bit of momentum in the broader markets as well, still selectively in the mid caps, small caps, micro caps, you're seeing a bit of interest and a bit of momentum as well. So that looks like it's going to continue, at least in the near term. Of course, earnings will be a big trigger to watch out for. Technically, as you've been highlighting for a while now, 24,500 is a big resistance on the upside. So looks like that will be a difficult ask, given that earnings have been a bit disappointing, so to speak. But from an institutional participation point of view, Nigel, this was a week where we lost a bit of momentum for sure.
Well, that's right. Institutional participation is out. But, Nimesh, I've been looking at two indicators, and one of them that you mentioned. I was trying to do a market recap for the week, and the SME index is up 5%. The BSE
index, exactly,
is up 5%. So that's the big outperformer. Tell you the kind of mood, actually, from the broader markets. And globally, if you look at it, the Bitcoin is making fresh highs yet again. Overnight, it was up 5%. That said, individual stocks, what's on your radar?
So I'll talk about individual names, but just to add to the SME index, even if you look at the IPO index, BSE IPO index, that's up 2%.
2%, correct.
So, clearly there is momentum in newer names, IPO stocks. So that's clearly there. In terms of individual names, so the first stock on my list is Sagility. That's been seeing a bit of buying interest from larger FIs in the last couple of days. Yesterday there was huge delivery volumes. So is the case today as well. I understand a leading global fund and one domestic mutual fund has been aggressively buying. Remember, today Jefferies has added Sagility to the model portfolio as well. So a bit of institutional interest seems to be back in that name. Second, couple of names where I understand there could be blocks very soon. MediAssist as well as BLS International. Both are consolidating off late, but I understand there could be large blocks soon in both those names. And the last name is JSW Energy. After a long bit of consolidation, you're seeing a bit of buying back in that particular name as well. A bit of momentum is back. There is a buying interest is what I understand from larger institutions. And specifically for JSW Energy, a leading domestic mutual fund has just started accumulating at lower levels. So this is where a bit of delivery has happened in the last couple of days. Some domestic mutual funds have bought.
119.
All right, Nimesh, thank you very much for that. So as always, a lot of chatter in the market, even as you put it, maybe a little bit of loss of momentum is what we've seen through the course of the week, especially today. Somal is back with us with what to buy or sell today for a reverse trade tomorrow. Somal, what do you have?
I have a Naukri to sell.
I think you're on mute, Somal.
We can hear you. Go ahead.
Yeah. Naukri is the one which I would like to sell on the sell side. I have HCL Tech as well. Naukri has just broken down a small triangle pattern on the downside, trading below 200 daily moving average. Medium term looks bad. Short term looks bad. So the stop loss for this stock would be 1420. Target would be 1270, probably even below that. The second stock would be HCL Tech. Same consolidation break on the downside. Stop loss would be 1675 and the targets would be 1510.
Thank you very much for that. By the way, IT is recovering. Tata Elxsi, which in the morning was down about 6%, is only down 1.5%. LTTS, also an ER&D player, has moved back in the green. Look at Tata Tech. That's completely flattened out. So from the day's low, even a Tata Tech has recovered close to about, 2% odd. In the large cap space, we've got, I think some of these stocks, like in Tech Mahindra, Infosys too, have managed an intraday recovery. As Rahul was telling us, that even if it takes time, especially on the ER&D company, which is basically Tata Elxsi, Tata Tech, LTTS, Cyient, etc., KPIT Tech, these are the ones you would qualify and classify as ER&D companies. Even if it takes time for the growth numbers to come in, and the fundamentals to improve, valuations perhaps have bottomed out, and some of the customers of these companies are talking positively. So some green shoots there. A little bit of an intraday pullback. But let's talk about Elon Musk's Tesla, which is all set to make its long-awaited entry into the Indian market on the 15th of July. It will inaugurate its first experience center in Mumbai BKC. Parikshit joins in with more.
Well, yes, the suspense, the mystery is finally over. Tesla will be launching in India formally on 15 July. This is at their showroom in Maker Maxity Mall in BKC, Mumbai. They have a 4,000 square feet space there, and the launch event is somewhere between 10 a.m. to noon. So over those 2.5 hours, they will explain their roadmap in terms of bookings and sales. It's quite possible that they may announce that bookings would begin in the next 2 to 3 days and sales will also begin very, very soon. What are they likely to offer in those showrooms and offer to Indian customers? Well, it'll be the Model 3 and the Model Y, which are in the range of $34,000 to $37,000. Now, roughly, this is around 30 to 35 lakhs in Indian rupees. You will have to keep this in mind that these cars are going to be imported from China, from Tesla's Shanghai factory. These are right-hand drives which will be brought in, and this would mean a 70% duty on these cars, which would take up the cost for an Indian customer to over 50 to 55 lakhs or even 60 lakhs for that matter. It's a very high price point, but we're told there are still a lot of Tesla enthusiasts who would like to have a Tesla in their stable. At that price point, it will compete with the likes of Kia EV6, the Hyundai Ioniq, you've got the BMW iX1, you've got a Mercedes SUV electric, which is in that price range. Volvo has a few cars. You've got the BYD Seal and the Sea Lion. So there are quite a few options, but Tesla would definitely be a status symbol for many people. We're also told that it will be fully loaded and the latest Tesla models that will be launched in India with all the bells and whistles. Essentially, whatever features are offered in China, in US, in Europe, in Australia, all of that will be offered to Indian customers with the latest chargers also. In fact, the company has leased out certain spaces for charging within the Maker Max City Mall, where their cutting-edge chargers will also be installed, and they will give a charging roadmap for India as well. Are they going to manufacture in India? No, there are no plans to manufacture as yet. Currently, the Mumbai launch is a litmus test. If it works, the company could consider starting manufacturing in India in 2 to 3 years.
And Parikshit, just to revise, since these cars are not being manufactured in India, they're being fully imported. So what is the duty?
Yeah, so there are two sets of duties. It's an important question, Surbhi. For cars costing up to $40,000, the duty in India currently is 70%. And those which cost more than $40,000, the duty is 100%. Recently in the union budget, the duty for cars costing up to $40,000 was reduced by the finance minister. So this is a reduced duty that Tesla is looking at, but 70% is still very, very high. And both Elon Musk and also Donald Trump have been raising automobile tariffs in different negotiations. In fact, Tesla is actually hoping that because of the India-EU trade talks and India-US trade talks, the tariffs would eventually come down to possibly around 10%. And if that were to happen, and if we get a deal with European Union, we could possibly see more cars come in from Berlin to India than anywhere else. Tesla has also not yet applied for the scheme for promotion of manufacturing electric cars in India. This was literally a scheme that the Indian government had brought out for the likes of Tesla and VinFast. Tesla has not shown interest in this scheme, which would give them a concessional duty of 15% in return for a commitment to manufacture cars with a total outlay of $500 million. But it remains to be seen how these FTAs with US and Europe work out. If it all works out and they see a good response in India, they would follow up with a showroom launch in Delhi and maybe even manufacturing operations.
All right, let's see how India greets Tesla and how Tesla drives on Indian, especially Mumbai roads. Very, very interesting times ahead. Thank you for that, Parikshit. Well, from one interesting story, let's move to another one. VIP Industries is in focus. Now, there's been a lot of buzz around VIP and what's happening, the current promoter's intent on the business itself. Mangalam is picking up some more inputs on this. Mangalam, fill us in.
The promoter's intent has been clear for the last couple of years. They've been alluding to looking to sell stake in the company owing to lack of succession in the company, and as a result of which they were looking at multiple partners. There have been multiple times in the past reports that some of the others are looking to buy stake in the company, but now we understand that a deal is imminent and it's very close. The promoters are in advanced talks to sell a stake in the company, and among many of the private equity players, Multiples is the one which is likely to go ahead and be in the race for VIP Industries itself. Remember, the promoters own over 51% stake, and any such deal that happens triggers a mandatory open offer for minority shareholders. So that is something that may happen as well. But promoters in the past, like I said, have alluded to looking to sell stake in the company. And if you look at VIP, the stock, that there is a deal brewing, the stock was sniffing that because in the last 3 months or so, it's up 75% from its 52-week lows. And more importantly, despite that rally, it's still about 36% away from its previous all-time high, which was last hit only about 3.5-4 years ago. If you look at VIP's performance in the market as well, over the last 5 years, the stock has rallied just about 80%, as against Safari, which has rallied over 1,000%. So not only are they losing market share in the stock markets, but even in the overall market. So whenever the deal happens or whoever the company goes to, the important part will be the revival of brand VIP along with growth in Skybags and their premium product Carlton. The second thing you'll be looking at, winning in channels. CSD was taken over by Safari, general trade and e-commerce channels. And finally, the upper end has been fairly disrupted by entrants like Mokobara, Uppercase and other newer players. So to that extent, competing against these players with this brand will also be very crucial to track.
Thank you very much for that. Get into a break. On the other side, we'll get you more in the market. Stay tuned. Welcome back. Sudeep Bandyopadhyay is now joining in. Sudeep, so many big movers on the way down. TCS on the way up. Glenmark, HUL. Any investments, any trades that you made or recommended?
Well, HUL has been on our list for quite some time. And developments have been pretty good. So I think we'll have to see what happens as far as the demand for the FMCG products are concerned. Marico's numbers clearly show demand is kind of back. I think if that stays, HUL can clock about 6% top line growth during the current fiscal. That's what our estimate. And, we are having a target of 3,000 plus for HUL at this stage.
Glenmark? You see re-rating?
It's a landmark deal. It's a landmark deal, and it's it's more than Glenmark. It's for the Indian pharmaceutical industry. This is probably the first time one molecule from India is being taken up by a global player, and 700 million, upfront payment is quite commendable. It does show that, we are finally stepping into the serious R&D business. Great for Glenmark shareholders, and I'm sure, as confirmed by the Glenn Saldana, that good payment will be made to the shareholders as well, so they can expect a good payout.
Yeah, big shot in the arm, Sudeep. Short conversation, but the bell has rung and we've closed at the day's low. The Nifty ends below 25,150, a cut of more than 200 points. In percentage terms, about 0.9% lower. For the week, the benchmark indices have lost about 1.25%. The mid-cap index nearly down 2%. Lots of stocks to blame. IT, Reliance Industries, a couple of auto names. Look at M&M, Bajaj Auto, Hero MotoCorp. All these three are down 2.5%, 3%.
Absolutely. And, there's large caps for you. Actually, if you look at the broader markets as well, and I'm just looking at the week, right? I mean, the small cap index ends down 1.5%. The mid cap index is down almost 2%, 1.9 by the way. So, the broader market maybe lost a little bit more in terms of just gains as compared to what the large caps really did. But dullish and slightly sideways, of course, finally, eventually, a down kind of a market is what you had this particular week. It's a wrap on this edition of Closing Bell. From all of us here, it's goodbye. But Editors Roundtable is coming up next, and there's got a very special guest joining us, Mahesh Nandurkar of Jefferies, coming up the other side.